market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we'll talk about OpenAI in a second, some of the nice, encouraging news also that we heard from Micron. But first, let's get straight to Mark Haefele, the Chief Investment Officer of Global Wealth Management at UBS. Mark, so good to speak to you. It's been way too long. When you look at what China has decided day and day over the last 2-3 days, I mean, does a China bazooka, does it mean less than what it used to, given how much they have to put in?
I think it's a great point. And, for us, I'm not sure this bazooka hits with the impact of some of the previous ones. As you said, given the challenges maybe around the housing market. So, and also, of course, the specter of what happens with the U.S. election and the potential for further tariffs. So this is encouraging. It certainly makes us more confident in GDP growth around the 5% level. But whether it's a stabilization or an acceleration, I think remains to be seen.
So, Mark, would you cash out of Chinese stocks right now or stay invested?
Yeah, I think that we're, onshore and where we're looking with a kind of a barbell approach towards the tech, but also companies that pay strong dividends, we would probably stick with that, if only because the exposure into the U.S. market for many of those names is very low. So in that respect, the U.S. election threat is not that large of an impact.
So, Mark, when you look at the world economy, some of the opportunities out there in markets, I mean, do you worry about, inflation coming back? Or are we too optimistic about some of the central bank moves?
Well, I think that, timing is important in answering that question. I think in the nearer term, there are several factors we have to consider. First, the U.S. election is extremely close, and we won't know who the president is November 7th. It's highly unlikely. So that is a source of volatility in the near term. On the other hand, it sounds like the policies of both candidates will remain on the spending side, and therefore fiscally stimulative, and we have something of a Fed put in place. And so, for us, I think looking towards the end of the year, we see the opportunity for stock markets to go higher, and but for there to be volatility in the near term. I think we see inflation coming down, but longer term, at some point, these questions of debt and deficits may come back and produce a blip.
Mark, I guess the million-dollar question, given what you're saying, a tight election in the race, of course, in the U.S., I mean, does it mean that we'll automatically almost have a very volatile fourth quarter?
Yeah, that's more than the million-dollar question, right? That's a billion-trillion-dollar question. I think it does. I think it does. I think that we've had some volatility over the summer, but the idea that that's going to just evaporate, given where we are in the geopolitical situation, given where we are in the election situation, and given where we are in the economy, a soft landing sure looks like a recession until you pull it out there. So three factors that are going to contribute to volatility into the end of the year.
Okay, Mark, hold that thought, because I want to come back and I also want to ask you what's your take on U.S. equities. But we're also getting some breaking news from the new Commerzbank Chief Executive Officer. Commerzbank will have the first meeting with UniCredit tomorrow. Of course, this has been one of the main stories that we've been covering over the last 3 weeks, as UniCredit has spoken about its interest in Commerzbank and then actually keeps on increasing the stake. I think we're now at 21% that UniCredit owns in Commerzbank. Also, Bloomberg has learned that the company behind ChatGPT is weighing giving the CEO, Sam Altman, a 7% equity stake. Now, let's get more from Bloomberg's Tom McKenzie. So, Tom, how big a shift is this?
It is a big shift. In some ways, it's not hugely surprising given the direction of travel for OpenAI. It started in 2015 as a non-profit, and then, of course, they had to shift to driving revenues because of the cost, the sheer cost of the compute, the GPUs and the infrastructure underpinning the models. They started off as a research lab. To do that research lab, you need the models, you need the infrastructure to power those models, so they needed to have those revenue drivers. It seems, though, that they are now looking, this is a reporting from Bloomberg, they are looking at giving Sam Altman, of course, the CEO of OpenAI, a potential 7% stake. Could be very valuable. They're looking at raising $6.5 billion US dollars with a valuation of 150 billion US dollars. Part of this seems as well aimed at trying to hold on to talent. They've seen a number of senior managers leaving in the last few months, and potentially as well trying to hold on to Sam Altman, who, of course, is this key figure now in generative AI and how that evolves. Giving him a 7% stake. He's previously said, look, I've got enough money, I don't need equity. They're looking at this potential restructuring. They say, again, the company OpenAI said, look, we're still aiming to try and benefit society. That's still our goal for OpenAI. But now they're looking at this change, again, which could be really consequential in terms of how we think about OpenAI with that investment from Microsoft, of course, and others.
Yeah, Tom, thank you so much. Tom McKenzie there with the very latest, of course, on this Bloomberg scoop. But, Mark, we also have Micron gaining, I think, some 16% pre-market. The world has definitely benefited, or at least markets have definitely benefited from this extra appetite for AI in general. Does that permeate through some of your investment strategy?
Yeah, absolutely. And let me say about that break-in, I love it because first, in a segment before we started, you posed the question, will Commerzbank listen to Andrea Orcel? And having worked with Andrea for many years, I can say, oh, yeah, they're going to at least listen to him. And then secondly, I think the things that you've been highlighting around Micron and OpenAI speak to something that we see, which is that this theme of artificial intelligence remains durable. And it's an area where if people are underinvested, we would recommend they deploy capital. If they're overinvested because they have tremendous gains already, we might hedge around some of this volatility and valuations here. But longer term, we think this is a very strong trend that's going to continue.
And so the way to play it is what, semiconductor and mega caps?
Yes, for us, that we think that the this capex spending that these mega caps have and that's going towards AI is indicative of strong support for semis, which still remain a choke point in this AI value chain.
Mark, what's your take on the near-term direction for the U.S. dollar? And actually, in general, when you look at U.S. equities, are you still bullish?
We are bullish on U.S. equities into next year based on kind of the things that we discussed. We think that earnings growth will continue. So we're positive on U.S. equities. Sorry, what was it? There was two questions in there.
The near term, there's a near-term dollar question on given all the uncertainty. I don't know how much it fluctuates.
Yeah. We think that the dollar has peaked, and so that we'll continue to see weaker dollar from here. And I think there'll be volatility around the election because some of the policies, we hear about potentially more tariffs, whether they're targeted or not targeted. That could give some dollar strength, and obviously geopolitical concerns can give some dollar strength. But in speaking to potential appointees in the Trump administration just last week, they stressed again just how kind of fundamental to President Trump's views a weaker dollar remain.
Wonderful. Thank you so much, Mark, for joining us. I love your comment on Andrea Orcel. Of course, he was at UBS for such a long time, and I hear from everyone he's just a great deal maker. I don't know if it's different if you're yourself in the driving seat instead of an advisor. So we'll have to keep on watching that. Mark, thank you so much. Mark Haefele, Chief Investment Officer of Global Wealth Management at UBS. Now, we're also looking at live pictures of the Swiss National Bank, where, of course, in the press conference, we had heard just a couple of minutes earlier from Thomas Jordan what was his last press conference. So we'll have plenty more, of course, on the S&B and what that means for any move lower in the future. You can continue to watch that press conference on Live Go on your Bloomberg terminal. Now, Chinese equities get a boost after more stimulus measures from Beijing and a Politburo pledge for forceful rate cuts. More on that next with Joe Davies, Global Chief Economist at Vanguard. This is Bloomberg.
I think China is going through a massive transition from old economy to new economy, from massive investments in property and infrastructure into massive investments into the new economy. They will succeed in that transition, right? I mean, they've got the technical competence and the know-how, but they're meeting a lot of barriers along the way. And it's a tough transition. I think China has a huge amount of fiscal firepower, and as they've shown today, they have a lot of monetary firepower as well.
Well, that was Bill Winters, the Standard Chartered Chief Executive, on China's transition to a new economy and fiscal firepower. Now, we spoke at the Bloomberg Philanthropies Earthshot Prize and Global Business Forum in New York earlier this week. Now, sticking with the world's second largest economy, Chinese stocks extended gains today after the Politburo vowed to implement forceful interest rate cuts. This comes after Beijing was said to weigh injecting $142 billion of capital into China's top banks. Now, for more on this, we're joined by Joe Davies, Global Chief Economist at Vanguard. Joe, as always, thank you so much for joining us. I mean, this and much, much more.
Yes.
So, philosophically, I know for a long time the markets were expecting this big bazooka.
Yeah.
And the big bazooka is not really doing, the effect it's supposed to.
Yes.
But also it kind of brings China to the economy they don't really want.
They don't really want. I mean, again, we've been bearish on China for some time. I mean, this is a debt overhang from a real estate issue. And so when you look at history, it's very clear. I think this is a step in the right direction. We've been somewhat just wondered why they've been dragging their feet. I think they just don't want to follow the path that many Western economies followed in the global financial crisis. But ultimately, they will do that. So this is the first of many steps. Yeah. Monetary policy will be somewhat ineffective. Fiscal will need more, and some of the banking capital infusions, I think, are, again, step in the right direction. So whether they want to admit it or not, Chinese officials have to adopt some of the Western playbook from 2010, 2011.
But overall, I mean, are we underestimating the fact, they're trying to change the economy?
Yes,
so
they are.
There's trade wars, there's tariffs, but also they want to go up the value chain by about 20, 30%. Is that broadly what they're trying to achieve, and are they succeeding?
They do. There's a lot of horizons one has to think about for China. There's a near-term stabilization issue. Regardless of that, they have a demographic headwind that's a century in the making, and so they're going to try to move up the AI and other value chains. That's a 10 or 20-year horizon. I think they will be successful on that front. But the U.S. has been successful in technology as well. They still had major issues in 2010, 11, 12, and so I think that's the horizon issue I talk about.
Joe, I also want to bring in the S&B because we're hearing, I think, the last speech from Thomas Jordan, who's also been very good to Bloomberg, actually. I've been speaking to him for many years, and it's almost, I mean, has he done a good job? It seems like, he's managed to stabilize. I know it's a small, open economy.
It is.
It's easier to manage than most.
Yes.
Today, saying that they're cutting borrowing costs by a quarter point at, this third straight meeting.
I think it's very positive. I mean, you look at S&B, you look at the Federal Reserve, obviously much bigger issue. The central banks are trying to underwrite risk assets because they're trying to support growth. Inflation is moving out of the picture. And really the question for both Europe, and we saw some of the data the past 2 weeks on the weaker side, as well as the United States, do you have this hold up in growth? Because we are going to be in the U.S. certainly for some turbulence.
So the fact that inflation is out of the picture, does it worry you at the margin? I mean, we have an active war in the Middle East.
Yes.
There's a lot that could go wrong. We're talking about possible 100% tariffs if President Trump's in the White House.
Yes.
I mean, we're kind of dismissing as inflation, as thank you very much, that's been
I wouldn't dismiss it, Francine, but those are both stagflationary. I mean, yeah, we have an inflation spike, but it really hits growth, and that's what ultimately will imprint the equity market and central bank policy. So there's a longer-term inflationary picture with debt-related issues, but let me park that aside right now. Now you're talking about growth. The U.S. in particular, at the end of the day, will carry more than any other market, and it's been amazingly resilient. I think we went for some pocket of weakness, but we do not see a recession.
Yeah, it was amazing how Jay Powell calibrated it.
Yes.
I mean, I read this opinion piece saying, like, only a lawyer can do that, give you 50 basic points cons, but make it feel like it's fine.
Like it's fine. Well, and I think the Federal Reserve is more concerned about growth than they let on. I mean, let's be clear. This is a central bank. They deserve a lot of credit, but they are all in on the soft landing. They're putting their personal reputation behind it. So, our view is they're going to be more aggressive in the near term. It likely means an L in terms of the Fed funds rate. We could see greater reductions to the end of this year. Then we think growth will hold up, and then I think they're going to be less reluctant to cut longer term. But so again, the horizon will matter for the Fed.
So how many cuts?
How
many more cuts? And like 50?
Yes. I think 50 is up for debate for the next meeting. There was a risk of us seeing 50, in the past meeting, and then, I think 25. Again, it'll be on the labor market. We have perhaps the best leading indicators of the labor market of any firm because of the size of our retirement plans, and so we see new hires. We picked up that weakness 6 months ago. We still see weakness in the jobs report, but we're not seeing negative sort of job prints. If we saw that, the Fed would look really prescient, but the market would also say they're behind the curve. I think what's going to happen is we're going to see some softness, but we're seeing a pause in hiring rather than demand is falling off. So unless that picture changes, and when we get into 2025, it's going to be more of, are we around this neutral rate? And it's going to be a calibration exercise between now and then. I think they think neutral is very low. We disagree, but because of that, they have a bias for greater cuts given the softness they see in the labor market.
But your base case is soft landing.
But with turbulence, and I'm not trying to I'm not trying to avoid the question, Francine, that there's going to be choppiness in the data. And the other thing is the Federal Reserve and the United States got very lucky given the immigration surge we had the past 2 years. That slowed down the labor market more than the Federal Reserve policy did. And so what that means is that the Federal Reserve can ease, but we're going to have choppiness. The big question is 6 months from now, there's a fork in the road. The markets... One market is wrong. Either we're going to see continued cuts like the bond market thinks, well, that means much more material weakness in the labor market. Or the equity market is overpriced because we have that soft landing. So it's one market is wrong, but we're not going to know that for several months.
All right, Joe, thank you so much. Joe Davies, Global Chief Economist at Vanguard, stays with us. We'll talk a little bit more about the dollar and other currencies as well. This is Bloomberg. Welcome back. Still with us, Joe Davies, Global Chief Economist at Vanguard. Joe, thank you so much for sticking around. We were talking a little bit before about China, some of the headwinds, what the Fed is doing. What's your take on what U.S. dollar does in the near term?
Sure. Where the U.S. dollar, obviously, strength equals exceptionalism. And so I think if we're going to see a broadening out in growth, that would imply a weaker dollar, which would actually be positive for risk assets. So, again, we've been, really bullish on the dollar, just given we saw with the exceptionalism. I think we're working into a period in the next 12 months where that dynamic should change. If China can stabilize some growth, Europe should benefit from the U.S. aggressiveness. And then we have a coin in the U.S. economy, which is clear that trajectory. So all three would imply some more weakness in the U.S. dollar.
But depending on who gets into the White House, you're going to have two very different economies stimulated very differently.
Well, I think the one question is on the tariffs, and that's the big one. But outside of that, we focus on policy, not party. On the fiscal side, there's more similarities than difference. Both of them have some negative longer-term trajectories, but it's really the tariff issue. What's stated could be different than what we could see enacted. But that, to be fair, that is the wild card.
Do you worry about a Treasury auction going badly, given the high level of debt and neither party talking about it?
I think it is a risk. That risk will grow over time. Again, that's the biggest investment issue for all viewers, I would argue, on Bloomberg for the next 5 or 10 years. But whether it comes home to roost in the next 6 months with the Federal Reserve that is easing is probably unlikely.
Joe, as always, thank you so much for joining us.
Thanks
Joe
for having
Davies, Global Chief Economist at Vanguard. Coming up, from his shock firing last year to potentially getting an equity stake in OpenAI. We have more of our exclusive reporting on Sam Altman and the future of the artificial intelligence company. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Stocks rise in Europe following a surge in Asian markets as China pledges more fiscal support. Now, Bloomberg learns OpenAI is considering giving chief executive Sam Altman a 7% stake and restructuring to become a for-profit business. And the U.S., Europe, and Arab powers push a 3-week ceasefire between Israel and Hezbollah as they look to prevent a wider conflict. Well, Lebanon's economy minister tells us Hezbollah has shown flexibility over a proposed truce. Now, we look at the markets, we look at China. The other thing we need to watch out is a bit for political turmoil in Europe. France's 10-year yield surpassed Spain's for the first time since 2007. We'll have plenty more on the new political class in France. But let's return now to our exclusive reporting on OpenAI. Bloomberg understands that the company is discussing giving its chief executive, Sam Altman, a 7% equity stake in the firm and restructuring to become a for-profit business. Now, let's bring in Robert Lee from Bloomberg Intelligence. Robert, what does it tell us? Good morning, first of all, but what does it tell us about what OpenAI will become?
Sure. As you said in your intro, I mean, I think it's well known the business was set up as a non-profit seeking firm back in 2015 with really altruistic motives to develop this technology for the greater good of society. So what's happened is they've obviously, with external interest from commercial organizations like Microsoft, they're looking to create a so-called public benefit corporation, which still has these altruistic motives, but is a profit-seeking or a profit-making entity. So in other words, not a pure charity. So the story that's broken is that if that happens, and this is not confirmed, that Sam Altman may be given a 7% stake in that new business. But there's a lot of ongoing uncertainty, isn't there, in the OpenAI story. For example, of the 11 founders who put the business together back in 2015, we've seen the majority of them leave, only 2 remaining, including Sam himself. You know, we saw the CTO sort of resign from the business recently, and there's been an ongoing saga, you know, numerous developments. Sam ousted as CEO earlier on and then reinstated. So it's been quite a, dare I use the word, tumultuous story. So this is, you know, the new unfolding chapter, I guess. So we'll have to see how things settle out from here.
I mean, Robert, the question is, can you really be a charity? Can you be a force for good, or try and be a force for good, if you have to be profitable? And if you're profitable, who are they selling to?
Well, I have to say, I mean, there's an inherent sort of conflict, isn't there, really? Because, again, charities are there for the greater good. They're not there to seek profits. But equally, can you really have a profit-seeking entity that is looking to plough those profits back? I suppose if it's tightly regulated, and clearly I'm not a regulatory expert on this, but if it's appropriately regulated and controlled, then in theory this sort of thing can work. But although none of the departing founders have made public comment on it, I think it's fair to say there is some disquiet within the original management team, and that is obviously one reason why some of them have decided to move on to other things. So in what form will OpenAI be in the future? Is this going to impact its ability to continue leading the industry? Does it have any impact on the fundraising round they're looking to pull away at the moment at maybe a valuation of up to $150 billion? Again, I think there's still a lot of ongoing questions there for the business. So it will continue to generate the headlines, I'm sure, for months to come.
Robert, thank you so much. As always, Robert Lee there from Bloomberg Intelligence on this pretty spicy story that I know will follow for many, many weeks and months. Now, Commerzbank, we understand, so there's a big conference, of course, put together by Bank of America, and there's a webcast of a lot of the chief executives that are coming in and talking. We heard from the Commerzbank chief executive officer, the new chief executive officer, and she said they will have the first meeting with UniCredit tomorrow. So let's bring in Stephen Ahrens, our finance reporter in Frankfurt. Steve, I mean, this has got us all guessing on, what happens between Commerzbank and UniCredit. We know that the UniCredit chief executive is pretty compelling, so I imagine you would at least, take a meeting with him. But where are we?
Yes, that's right. I mean, Argel, and he is a compelling personality. He's got, I think, very strong ideas for how to improve Commerzbank, where he now controls the largest stake, bigger than the German government. He believes he knows what's best, given the profitability of UniCredit is much higher than Commerzbank's. And now that Commerzbank has a new CEO, Orlop, who was at the conference earlier today, as you said, she will assume the role next week, but is effectively in control. She will now meet him and discuss his ideas. She's actually signaled openness to the ideas. I mean, she realizes UniCredit is a powerful stakeholder now, and it would be, I guess, not appropriate to just ignore him. And so that's what she's going to do tomorrow.
So, Steve, I mean, there's a couple of controversies, of course, on whether the German government was behind it, whether they knew about it. If you were to look at the main stakeholders, who's the most important one right now?
Definitely Argel. I mean, he came up with this plan to swoop in and take a stake and then expand it through derivatives to 21%, bypassing the German government. He's really in control. I mean, he was a bit taken aback by the backlash that his approach created in Berlin. So Berlin is to be taken seriously. But at the same time, they said yesterday, we don't want UniCredit to take over Commerzbank, but there's little we can do about it. I mean, if they buy shares on the open market, what is Germany going to do? They can't just stop it, right? And of course, Commerzbank too, they unveiled new profitability targets today to show they are a strong bank on their own. But in the end, if Argel decide to take them over, then, that's what faces them. So again, UniCredit is right now the most powerful actor here.
Steve, what else? I mean, so he could go basically, and Argel could just, continue to build his stake, right, despite opposition from both the company and the government.
That's right. He could do that. There's one technical hurdle. He's applied with the European Central Bank. Big stakeholdings in European banks need permission from the ECB to cross certain thresholds. He is, by actual shares, he's still below 10%, and the rest of the 21% is just through derivatives. And so he would need more approval from the ECB to actually go ahead and buy more stuff.
All right, Steve, as always, thank you so much. Steve Ahrens there in Frankfurt with the very latest on UniCredit and Commerzbank. Now, coming up, can a 3-week ceasefire prevent all-out war between Israel and Hezbollah? We'll get reaction to the proposal next, and this is Bloomberg. Welcome back, everyone. Now, a 3-week ceasefire between Israel and Hezbollah has been put forward by the U.S., Europe, and Arab nations in an effort to prevent all-out war. Now, Israel's ambassador to the UN says his country wants a diplomatic solution, but Iran's foreign minister has cast doubt on that.
I would like to see a ceasefire and the return home of Israelis to the homes in the north and southern Lebanese to their homes in southern Lebanon. That's what we all want to achieve. It will happen either after a war or before a war. We hope it will be before.
The team has no intention of pursuing peace or agreeing to a ceasefire. Its real objective is to drag the entire region into a full-scale war.
So to understand what's happening and what comes next, Bloomberg Horizons anchor Jumana Barsecha is here with Rosalind Matheson, REMEA News Director. So thank you both for joining us. I mean, first of all, it seems it's escalating. The markets are largely ignoring this, but it does seem like things are boiling over, and Lebanon now is being pulled in almost full on.
Yeah, well, things really intensified this week with the airstrikes that began on Monday. The Lebanese Health Ministry now putting that the total number of deaths has reached 636, more than 2,000 people wounded just in the last 3 days. So it has taken a really heavy toll on Lebanon, and not just specifically South Lebanon, but around different parts of the country too. Officials that we had spoken to in the last couple of days did say that the meetings around the UN General Assembly were going to be key. And I think what we heard yesterday, that ceasefire proposal put forward by U.S. President Biden alongside French President Macron, supported by EU leaders and also crucially Arab states as well, was a big step in the right direction towards de-escalation. Now, the question from here is how receptive both Lebanon and Israel are going to be. We haven't had an official response yet, but I did have the opportunity to speak to the Lebanese economy minister this morning. And one of the questions I put to him is, how open is the Lebanese government to a ceasefire? And then also, will Hezbollah adhere to the terms of the ceasefire deal? Here's what he said.
The next 24 hours would be very critical because we are at a very serious turning point. If a ceasefire is to be accomplished now, we would really have helped Lebanon, we would have helped the region and avoided a full-scale war that is very, very close to happen, in the few hours and few days ahead of us.
And later on, I did press him and ask him again whether he thought and he felt that Hezbollah would be open to this idea of a ceasefire, because it is important to know that Hezbollah also have political representation in the Lebanese government right now. And his perception was that, and this is a quote, Hezbollah have shown flexibility in terms of the push to move towards a truce in the last 24 hours.
Roz, I mean, if we take a step back, so first of all, why is diplomacy not working? And is it, is Hezbollah Lebanon, or is it part of Lebanon?
Well, the interesting thing here is, as Jumana was saying, is that this could actually create a small break in what we're seeing is intensifying fighting, Israel moving troops, more troops to the north of the country, calling up reserves to the north of the country, not really wanting to start a ground war, but saying they have those troops there if needed. And that's really raising concern. If you get a ground war, then you have a real risk of a broader war. And for Israel, in a way, Hezbollah is kind of more fundamental than Hamas. I mean, Hezbollah is really seen to them as an existential threat in the longer term. And so the question is, would Israel agree to a ceasefire? And the diplomacy is obviously coming on both sides, from the US, from France, from the Arab states, as Jumana was saying. But in a way, it's kind of up to Israel. And there's some complicating factors there between the government. Will Netanyahu agree? Will the military agree? Will the factions in his government agree? And so we're quite a few steps potentially from getting that ceasefire. And if we do, there's no understanding yet what would be the conversation around a proper agreement to end the fighting that's going on, mostly of an aerial nature. So you get a ceasefire, but what do you get as a result of that? And so that, we're in a very complicated moment still, and there's no sense that, Israel's got an ultimate goal, which is to degrade Hezbollah, to push them back from the border. Will a ceasefire achieve that?
Yeah. But would a ground invasion even work? I mean, does Israel have enough troops to be fighting on all fronts?
Well, they do, but they are pulling resources out of Gaza to do so. And, of course, we've seen history with ground wars before involving Israel and troops into Lebanon, and it's something they clearly do not want to do unless they feel they absolutely have to do it. And so, it's a very risky moment for Israel here because they're pushing, but they're obviously wanting to come at Hezbollah from the air primarily. As Jumana was saying, a really intense bombing campaign going on in southern Lebanon, but do they reach the point where politically they feel they have to?
Jumana, what do we know about citizens that, we understand that, of course, a lot of France, the UK are trying to get their citizens out of Lebanon, and also the state of the economy that was already in bad shape.
Yeah, so that's the thing. And just to pick up on what Rosalind was saying, from Israel's perspective, their new war objective is to reclaim security on the border. They don't want the residents of northern Israel to be subject to rockets and to this exchange of crossfires. So the war objectives are very clear here. But equally, on the Lebanese side, now you have, and this is per the foreign minister, 500,000 people internally displaced, and they're being scattered around all over the country, nowhere to stay. This has actually led to indirect effects, things like price gouging within the country as well, people looking to take advantage of the plight of other people. And it is one of the questions that I put to the economy minister, because the economy has been reeling the last couple of years. People forget this, but Lebanon defaulted on its debt 3 years ago.
Inflation is out of control.
Inflation getting better, but it was, triple digits. The currency is devalued more than 90%, and there's no clear path to reform and no functioning government. So it's really a dire situation. Add to that a state of war as well. And what the economy minister had to say was that this is a really strenuous time. Take a listen.
The economy is in a very bad place. This war has added a layer of challenge to Lebanon. In 2023, we were hoping, we had expectations of growth. We had hopes that certain sectors, including tourism and food industries, will flourish. All that has gone. All that has disappeared. Growth is non-existent at this point.
Growth is non-existent at this point. So even before the war, growth was non-existent, and this has just made matters a lot worse. You can see the economic imperative from the Lebanese standpoint, in addition to the mounting humanitarian cost for the Lebanese government to want to put an end to this war.
Roz, what do we know about the evacuations then of foreign citizens from Lebanon?
Well, obviously, it's incredibly difficult. A lot of countries are saying they're having difficulty getting people out. And there are, of course, Irish peacekeeping troops, for example, operating in the border area. But as Jemana was saying, it's also for the people of Lebanon. What we're hearing, many people have left Lebanon over the years because of a series of crises, the blast that we saw at the port, for example, the sense the economy is cratering. But there are people who've stayed on to work and live there. And we're now hearing, are those people, the final straw, they're going to leave or try and leave? And where does that leave Lebanon in the longer term in terms of any prospects of, resurrecting the economy and political stability? So there's that aspect of departure as well going on. But we do know, that countries including the UK and others are saying to their people who might be in that area, it's very, very difficult at the moment to get them out. So they're highly concerned about, again, that intensification of the bombing that we're seeing coming from Israel over the border.
Yeah, and it's difficult. I mean, the government cannot get rid of Hezbollah, right, because it's so entrenched in Lebanese politics.
Yeah, it's a question that I put to one of our guests on Horizons earlier in the day, a geopolitical analyst based in Beirut. And remember, the Israeli Prime Minister Benjamin Netanyahu left a voice message addressed to the Lebanese people, and he said, our war is with Hezbollah. Our war is not with the Lebanese people. So to what extent can you draw a distinction between Hezbollah and the Lebanese people? And what people inside the country tell me is that because the humanitarian toll has been so big, because of the rising civilian casualties, what has happened on the back of this is many people in the country are rallying behind the government, and Hezbollah do have representation within the government as well. And so there is this feeling, a brief moment of unity for many within the Lebanese population right now. They just want the war to end.
Roz, who does Netanyahu listen to? Actually, is there anyone? Is it the U.S. candidates that will be in the White House? Is there anyone that he listens to try and de-escalate this?
Well, certainly he's managing his own political situation at home, so he probably listens to some of the mood music there. He's fenced himself in with the right in Israel. There's a lot of pressure to keep going against Hezbollah. There's also pressure to bring the hostages home from Gaza. He's got those considerations, but it's clear. I mean, the US and others have been pushing for a ceasefire in Gaza for many, many months. They've been publicly criticising Netanyahu and calling for restraint. He and Joe Biden have had some tense moments in a broadly, warm relationship. And if he's not listening to the current US president, would he listen to the next one? And obviously he's in the US for UNGA, for the UN General Assembly. Like who he meets and talks to there will be very interesting. But it's mostly about, I think, for Netanyahu, his own calculations about where he sits in terms of his political situation at home and managing all those complexities.
Thank you both for joining us, Jemana Bersace and Rosalind Matheson. Coming up, food for thought as the French catering company Sodexo, see what we've done there, considers taking over a U.S. rival. We'll have the details next. This is Bloomberg.
think it's very necessary in Europe, and because Europe is overbanked, and growth is relatively low, and banks at this point are well capitalized and healthy, so it's necessary. But if we needed a reminder how difficult it is, the fact that, as far as I can tell, UniCredit is following the rules, and German politicians and German unions have said we don't like this. Maybe it's posturing, or maybe it's a real obstacle. I don't know, but it's tough. It's tough to get things done within Europe.
Is it a test? I mean, if this goes through, if the rules are followed, and if this goes through, would it make you confident that actually things are moving in the banking sector?
I think it's a really important litmus test. Not the only litmus test we could have, but there's industrial logic to the transaction. There's a willing buyer who has plenty of capital to make this kind of, and there's a healthy but not thriving bank on the other side, and Germany's overbanked, so it would seem, and of course UniCredit owns a very big bank in Germany, so it seems to make sense. But these things, they get political, and then it gets complicated.
Well, that was Bill Winters on the Commerzbank and UniCredit potential deal. You can hear more from our interview with the Standard Chartered Chief Executive Bill Winters on the podcast In the City that I host with Bloomberg's David Merritt and Allegra Stratton. Now, Commerzbank and UniCredit shares have rallied after the incoming Chief Executive, Bettina Orlopp, said the company will have a meeting with UniCredit tomorrow as the Italian lender prepares a potential takeover. Now, the German lender has also pledged to increase profitability and pay out more money to investors. Another company we're following is, of course, the French catering firm Sodexo, slumping this morning, the worst performer on the Stock 600. Now, this comes after we reported news of a potential deal to acquire its U.S. rival, Aramark. Now, let's get straight to more details with our Bloomberg Deals reporter, Manuel Baigorri. Manuel, what do we know about the deal?
Thank you, Francine. I mean, it's a super interesting deal, right? A combination of two of the biggest caterers in the world. We've got Sodexo, studying the feasibility of a potential combination with Aramark in the U.S. Obviously, for Sodexo, it would make a lot of strategic sense to expand in the biggest market. Yet, the biggest question is, how are they going to finance such a big deal, given that we're talking easily north of $10 billion, given that Aramark's shares have rallied this year, and also antitrust concerns, combining two of the biggest industry players, is going to raise a lot of eyebrows within regulators. So I think, it's a combo that makes sense, that has been, as we explained in the story, on and off and on again, explored, yet there is hurdles in the horizon to get it done.
Manuel, thanks so much, as always. Our deals reporter, Manuel Baigorri. Up next, Bloomberg Brief with Manus Cranny in New York, and this is Bloomberg.